All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel and welcome back to Trading Week Recap, series I post every Friday. We'll reflect on the past trading week. We'll talk about a few stocks that defined the week for me personally, and I'll just let you guys know what I'm thinking about the markets overall as we head into the weekend. So as always, we'll go over each topic that we're going to be discussing, then we'll dive into each one individually. In front of us, TradingView, the usual. So we have SPX, S&P 500 index right here. We will talk some of the equity indices. You can see that S&P and Dow did end the week green, really on the back of Apple and big tech. So Apple, if you heard the news, I'm sure you did cross the big $2 trillion mark earlier this week. We'll actually cover that in more detail in tomorrow's Waves weekly video, so stay tuned for that. But again, SPX, Dow did end the week green. That said, there was a lot of red across my watch list specifically, but across the board in general. So I kind of just want to quickly go down the watch list, just give you guys my take on some of the sectors in here and let you guys know what I'm thinking. We will actually kick off the video though by reading my newsletter, the newsletter that I sent out this morning. So this will be how I kick off each of my Friday trading week recap videos, is reading you guys the newsletter that I sent out that morning, because again, I spent time doing this and I think it pretty well sums up my thoughts about the markets and my portfolio specifically today. Okay, so we'll go over this. We will then quickly go over this CNBC article, just hitting on a few points as we close out the week. So read this quickly. We will then go into this very interesting article that I read in Bloomberg this morning, titled "Bears Are Going Extinct in Stock Market's $13 trillion Rebounds." Okay, so this is a very interesting article talking about how bears are a dying breed, how the bears are, like, the bulls are just completely overrunning the bears. Again, even with the current macroeconomic environment, always say this, always have to remind you guys, for those of you who are new especially, I'm aware, and I think everyone is at this point, that the economy and the stock market are two very different things, okay? And the fact that that is becoming such common knowledge, and we'll talk about this more once we actually get into this article, is scaring me in a sense, and I'll let you guys know why. So I'm excited to talk to you guys about that. But again, we'll go over this. So as always, before we get into it, I will ask you guys to please give the video a like if you do go on to gain value from it. Subscribe to the channel if you're new around here, and I'll wait to shout out my portfolio after we read this. Okay, so this is how I start everyone off. What's up, guys? I've made the following adjustments to my portfolio if you want to check them out. Okay, so that's talking about the physical portfolio on Teachable. This is just the newsletter. Okay, so, it's a red one in the portfolio today, guys. Can you guess what I did? I went on a shopping spree. If you're new to this game, trust me, I know it can be tough to stay rational when the waters get choppy. I may seem like a madman, but one thing this game has taught me over the years is how to sniff out weakness and capitalize on the weak. Okay, so you got to be sharp, all right? Like I always say, because I'm so fundamentally confident in all of my positions on a medium to longer term time horizon, I see the red as an opportunity to add to my current positions at a discounted rate. Let's get down to business. RIOT blockchain is seeing a pullback today along with almost the entire cryptocurrency market. All I'm going to say is embrace volatility. Use the volatility to your advantage. Wild swings in the market shouldn't be viewed as a scary thing. They should be viewed as an opportunity. This applies to each position we'll cover today. I'm not doubting the fact that any of these could fall even lower. I mean, they've already corrected pretty significantly, so my guess leans more towards the upside. If they do see more red though, I'm throwing my green at them. All right, so I always say this, you guys. Every position that I take on, every position I talk about on this channel, I'm fundamentally bullish on, okay? I've seen a lot of comments, like specifically because this week has been pretty red for some of the sectors we've been talking about, which we will look at in the watch list right after this. That's just part of the game, you guys. That's part of the of being a trader. If you want to be in this game, you have to be able to embrace volatility and understand that the red days are just a natural part of this cycle, okay? If you can't take the heat, get out. If you can't take the heat, just get out for good and stay out, because you're not cut out. You're not cut out for this game, okay? So that said, we'll take a look here at the RIOT chart. I'm actually not going to take a look at the charts on RIOT. I think with TradingView today, we'll just take a look at the watch list. But right here, you guys can see this is what I expect to happen with RIOT. Just personally, I expect it to either grow pretty organically, and this is very dependent on what Bitcoin's doing. Unfortunately, Bitcoin's seeing a decent pullback right now, so we might actually take a look at the Bitcoin chart. But I mean, I'm just so fundamentally bullish on RIOT and on Bitcoin as well, even though we are seeing a pullback. I'll explain that a little later. But RIOT, I think on the most bullish estimate I can see is by the end of August, we do retest this this significant uptrend lines around $7 and or play out this one, which again, as I said in the recent crypto convo, I would like to see this one play out just because it's more organic growth, and I feel like organic growth is a lot healthier, and I prefer to see that. Okay, so I wouldn't be surprised to see RIOT complete a bounce off that lower line of support support and then go on to continuing the significant uptrend that it's in. Remember, guys, I believe mid-September to early October is when crypto sector will start going parabolic. Okay, so remember that for when we look at Bitcoin. So we will look at the Bitcoin chart right after this. Remember that. I am looking towards mid-September, late September, early October. All right, so 2, Marathon Patent Group, Mara fell off a cliff today. I didn't expect to see this, to be honest, but if you've watched my recent analyses on it, then you know I didn't discount this as a possibility. Worst case scenario is that it falls way back to the $2 region and then goes on to continue the uptrend. Best case, I'd imagine, is something similar to the blue arrows that I drew up below. Okay, so you can see here, Mara, I got a lot going on here, but there's a lot of levels. So Mara is in this descending wedge. The bad part about this is it broke below this morning those levels that it did gap up to and use as a previous line of support. So that's bad news. I mean, that could have just been a fake out, though. I've been seeing a lot of fake outs in this market. Mara and Riot, both you guys have to remember, are very small cap stocks. So they're very prone to manipulation. That's kind of the sad thing about them. But I mean, that's the thing. That's why you don't try to day trade these guys. There's any large fund, any even small size fund, with any small multi-million-dollar even fund has enough capital to significantly sway the stock, and they have solid algorithms and stuff. So don't try to compete with those, you guys. Don't try to day trade stocks. That's why most people lose, because people with a lot more capital and a lot better resource and a lot better algorithms can out day trade you. So don't try to day trade. That's why I prefer to swing trade. All right. So either way, again, just because I'm fundamentally bullish on Bitcoin and this being a Bitcoin miner, same as Riot, I just think at some point, even if it doesn't follow these short-term trajectories, it's going to go up in the long run. So I just hold them. All right, so Sorrento is taking a beating as well today, which is strange considering that they just announced the very promising merger with company Smart Farm for roughly $20 million in stock. I'll link the article below if you want to check out the specifics. So we won't look at this article. Again, you guys can just Google that and find the article if you want. But this is great news. The stock did fall today, though, which is a bummer. So this is objectively great for the company. The merger is great for product development, and the all stock acquisition is great for business. Today's price action just proves to me that there are many weak players in this stock. Let them bleed out. Make more room for the hands who deserve it. So this applies to a lot of these. Okay, so you guys have to remember, small stocks, revolutionary stocks, especially stocks that have seen such run-ups and such hype, they're gonna have weak hands. They're gonna have those little day traders in here who like get a taste of success or buy high, which unfortunately, like you guys, I'm sorry if this happens. It's just part of the game, though. Everyone deals with this. Everyone buys high sometimes right before a crash. That happens to everyone. Like, you just have to go through it. You just have to stand it. Again, it builds resilience. If you really can't take it, if you're really having a hard time, then real quit, because you're not mentally sound enough to be in this game. Okay. So again, let them bleed out, make room for the hands that actually want to hold it and make the stock strong. Okay, so that's all good with me. Sorrento, I personally did add significantly to my Sorrento position this morning, just because I think it's such a great buy. So right here, my guess is that we see SRNE play out something like this. See chart below. This could be a slow and steady climb back up, but that's why I have longer term call options in play. Keep in mind as well, SRNE could drop some banging news this weekend, and we could shoot straight back into space. I'm not saying it will, but we've definitely seen it before in this sector. Okay, so this is something very important as well that you guys have to remember, especially if you've been around for a while we've been covering when we started with Moderna, Novavax, and Novio through those initial run-ups. All it takes is a little bit of good news, right? Like, you see this happen. What just happened to Sorrento happened to Moderna, Novavax, all of them. Great news. You see the rally, you see the bubble pop, crash, capitulation, and then you see the next bit of good news come out, and then you see the next rally. Okay, so this is just like, it's so obvious to me, honestly. It's Sorrento. Nothing's changed fundamentally about Sorrento. If anything, they're just making more progress in their treatments and stuff. So I mean, I'm still super bullish on Sorrento there. And again, I do think at some point in the future, we will reach the big $27. It might take some time, but I'm confident that it will happen over the span of the next few months at the very latest. Okay. So, 4, I've also decided to add onto my Kinross Gold Corp and Pan American Silver call options positions. Those calls saw a decent pullback today, and I saw dollar signs in my eyes. So, once again, if you guys stay tuned, you would know this. Very bullish on silver and gold miners. All right, we did see a pullback today. It makes sense. They've rallied so significantly over the past few months. I mean, have enjoyed the rally up until this point, and I'm still adding. So every dip, just buy the dips, sell the rips. You guys know the deal here. And again, on the dips, this applies to all of these. Just buy the dips. If these do continue to go down, I'm just going to keep buying. Okay, so that's just why, that speaks to my fundamental bullishness on these stocks, on these companies, not just stocks, but on these companies. that they're early in the bull market, and that's what I said here. I still see big things ahead for every sector we've covered today. When you're seeing consecutive red days, it's easy to believe that the party's over. For me, it's obvious that this is just the beginning, and history reinforces those beliefs. Strong hands always win in the long run. Team, stay rational and keep those eyes on the prize. Have a great weekend, fam. Okay, so again, you guys, I'm so like the day-to-day doesn't mean anything to me. I sleep perfectly fine at night. Even if like I wake up to red, like the past 3 days have been red for me. It doesn't make a difference. I just know that I have to come in, write the newsletter, reinforce you guys, and then talk to you guys here to reinforce your beliefs. Because I know a lot of you are new to this game, and it is hard. It truly is. I know it's hard to stomach, and it does take thick skin. But you guys, seriously, like that's why most people lose money. The reason most people lose money is because they try to day trade. They buy a position a little too high, don't wait long enough, see some red, panic, sell out, and then they're all discouraged and they quit. That's when you lose when you quit. So just don't quit. Keep your hands strong. And I mean, that's who gets rewarded in the long run. The patience. Patience truly pays off in this game. So just remember that, you guys. So that's the newsletter. Once again, if you guys do want one of those bad boys in your inbox every trading day, as well as access to the actual portfolio in here, check this out. I did just add the 7-day free trial option, so you guys can check that out. So 7 days free and then 20 a month if you want to stick around. If not, it's all G. But yeah, links, first link in the description if you're interested in that. If not, no worries. Okay, so let's go here again. SPX just barely, man, it is barely scraping new all-time highs. It's very hesitant. So you can see investors are hesitant. Like, are we actually going to reach all new all-time highs in the S&P, which it technically very barely has. So it's really tiptoeing that line there. So you can tell people are a little hesitant. That said, this is obviously a V-shaped recovery in a terrible, what is objectively still a very shaky economy. So, I mean, again, stock market economy to completely disassociated at this point. There's no correlation there whatsoever anymore. But again, that's just because the government is printing trillions of dollars into the economy, and that's what we'll talk about that in the Ways Weekly tomorrow as well. Just along with the stimulus checks about how the freaking government is printing so much money. And again, that's good for the market because it gives people money that they want to put into the market, saving and whatnot. Financial literacy. So that's great, but it does create for a very inflated, very sketchy market, which is why we're seeing so much volatility here, which is what we'll get into. So you can see here BTC really having a hard time right now. So just let's take a look at BTC. So BTC really pulling back. So I don't know what happened. Sometimes this happens before weekends, but I've seen a lot of times where I mean, BTC, Bitcoin, you guys, is another thing that because it operates 24/7, it's very susceptible to manipulation by individuals with, any large sums of capital, which in Bitcoin is a lot. It's global. It's a global asset. Anyone in the world can trade it, and a lot of people with a lot of money internationally do choose to trade Bitcoin. And again, they, similar to hedge funds, with smaller stocks, can easily manipulate the price of these stocks. They can make it seem like times are very bad and there's bad times ahead, and then they just wait for the price to go down, wait for people to get scared, sell off, and then scoop up the calls and shoot the price back up. So I've seen this so many times over the years in Bitcoin, you guys. That's why I believe, especially going into a weekend where Bitcoin usually does slow down, I think this could very well be a fake out. Let's hope it is. Again, I wouldn't be surprised either to see Bitcoin retrace onto this this uptrend line, this lower. It is still an uptrend, but it is a line of support, and that would intersect on the very low end. I think we could see a 10.5K Bitcoin, and again, in the short term, that sucks. But I mean, I still do believe that over the medium to long term. That's why I said remember September, October. So, I mean, anywhere from right here, September to October, I did just extend these lines yesterday. But either way, whatever happens in the short term, I'm pretty confident in the fact that we will, by mid-October, the latest, come up and once again retest one of these uptrend lines. And either way, they both kind of intersect at this $20,000 level, which was Bitcoin's previous high back in 2017. Fundamentals are way stronger now. I'm super confident that we could see that. All right, so that said, let's go on to here's what happened to the stock market on Friday, and then we'll go down the watch list. Okay, so sorry about that, guys. After we read this, we'll go down the watch list, and I'll let you guys know what I'm thinking about some sectors. All right, so here's what happened to the stock market on Friday. Dow Jones, so this is pretty much just saying Dow climbed, I'm not even going to go over that, or don't know why I highlighted that. So U.S. manufacturing and services activity surged along with home sales. Data from IHS Markit shows U.S. manufacturing activity hit its highest level in 19 months in August, while services were at their highest level in 17 in months. Meanwhile, existing home sales for July saw a record month-over-month spike of 24.7%. The average selling price for homes also hit an all-time high, jumping to $304,000. Okay, so again, this makes sense. This is why places like Austin, Texas are just thriving right now. So, I mean, let me know if you guys are from Austin. I've heard great things. Everyone's moving there. Everyone and their mom is moving to Austin just because it's, I mean, everyone realizes how bunk after this virus, after this pandemic, this lockdown, people realize how inefficient it is to live in a big city. It's expensive. There's nothing to really do, especially if people aren't going to be going back to work, going back to the office when like just the home office is becoming the new normal. Why not go somewhere where you can buy a home and have a sick home office and a lot of space and a nice home for significantly cheaper than living in a highly populated area where you have to pay a premium for living in a trash spot. Okay, so San Francisco, I'm sorry to any of you guys who are in San Fran, but like downtown San Fran is the epitome of that. So I think downtown San Fran is going to be a ghost town, but places like Austin, even where I live, like on the Big Island of Hawaii, we're seeing there's nothing available just because everyone wants to be in places, which you can say is a good or bad thing. It kind of sucks having so much saturation over here, and the trend is just going to continue that way. So places that have been kind of safe havens and like off the grid a little bit in a sense, we'll start to see a lot of rallies. So that said, it is interesting seeing this. So it feels also kind of big shorty in the sense that no one's really, like, there's so much unemployment, there's so much economic pain right now and economic struggle and international geopolitical struggle as well. We have an election coming up too, which just makes everything, it's just the cherry on top of this crazy wild pie that we're in as a world right now. So it's kind of big shorty to me. If you guys have seen that movie, I'd highly recommend. That's a content of the week prior to my content of the week in the Waves Weekly tomorrow, but I highly recommend you guys watch that. I mean, it just feels like everything is so out of whack and things are just gonna have to kind of tumble down, which gets into my argument here. But let's finish this off first. So Apple extends rally deer gain. So Apple shares rose 5% to a fresh all-time high, building on its rally for the week. I mean, again, Apple crossed the $2 trillion mark. It is now at, let's go down to Apple and then we'll do this. So we'll go down to Apple, take a look at this real quick. What's the market cap at? So Apple's market cap, so just earlier this week, it hit $2 trillion. I mean, it's at 2. So just think about that, you guys. Just in the past week, since it crossed $2 trillion, it's already added $127 billion to its entire market cap. So what is that like? So that's like half a Tesla, a little less than half a Tesla, just added on to the market cap since it crossed the $2 trillion market. That is like an Uber. That is significantly bigger than an Uber, actually. That is like I don't even know, but you guys get the deal. Like, that is just the amount that they've added since crossing the $2 trillion mark is the size of a very large cap company. Okay, so just think about that. Apple is a great company. I think Apple, similar to Tesla, is extremely overvalued right now. They did announce the stock split. Again, we will talk about the stock split and just why I think it's so crazy and so well defines the current landscape, the investor landscape right now. Like, stock split, people hear stock split. There's literally TikToks going around about kids saying that this is how you make generational wealth. You guys have to understand, like, if you buy 1 share of Apple, you get 5 next week. That's like, people think they're getting free money. That's just how so deranged this market is right now, which does make me scared. You know, we'll just move on to this because it does flow into this, and we'll close the video off by looking down the watch list. Okay, so bears are going extinct in stock market's $13 trillion rebound. Again, Bloomberg article by Lou Wang. Skeptics are a dying breed in America's equities. It's another illustration of how risky it has become to doubt the resilience of the market's $13 trillion surge since March. While perhaps logical given open-ended Federal Reserve support, rampant covering depletes at least one source of support for shares, buying by speculators who sold them to short. Virtually every constituency in the market has gotten even more bullish as the S&P 500 surged 52% in 5 months. In the past 21 sessions, there hasn't been a drop of 1%, the longest stretch since January. So again, you guys, you've seen the V-shaped recovery that we were just looking at. It's crazy that this is happening. And again, a big factor, the repurchase of those shorts has been a factor which contributed to the rally that we've enjoyed. So a factor is large hedge funds, players like Warren Buffett. You remember, like, people like Ray Dalio, huge hedge funds who just played this rally wrong and thought the economy was actually going to affect the market, but it didn't. They tried to short major equities. They got squeezed out. They had to cover their shorts. That's a short squeeze, and that when you get squeezed out, it shoots the stock price up. Okay, so that, along with just the Federal Reserve just pumping money into the stock market, giving money into the hands of everyone who is investing that money, like all the stars are aligning for this stock market. I'm gonna call it a bubble. Okay, so again, steamrolled by a rally whose velocity is the strongest in decades. Bears are giving up. At the start of August, the median S&P 500 stock had outstanding short interest, equating to just 1.8% of market cap, the lowest level since 2004. Data compiled by Goldman Sachs Group show all major sectors except energy saw bearish bets, sitting in the bottom decile for over the last 15 years. Because you can see here, this is short interest. Okay, so this is the amount of people who are wanting to short stocks within the S&P 500. This is insanely low. So this makes me, just to sum this up, you guys, this scares me as well. Just on top of all the crazy stuff that I just covered, this just makes me think that we're in for, there has to be a turn of tides, okay? Nothing goes straight up forever. Nothing goes straight down forever, okay? So I think we're going to have to see, although there is so much bullish sentiment, it's worrying me because when everyone's bullish, when everyone's getting greedy, when everyone thinks the market can't go down, is usually when the tides turn and the market does start to go down. So that is why I do have hedges in the portfolio. If you guys are part of it, you know. But again, shorts on the S&P, VIX calls, just stuff like that. Just because I am still worried. I know I talked about it a lot like over the past couple months, and it just makes rational sense to be skeptical of the stock market. But I really believe at this point, just because it truly is becoming just like common knowledge. Look at this short interest. No one's shorting stocks anymore. So I might think about shorting some stocks, to be honest. Again, zig when the market zags. That's kind of what I'm getting at here. For an example of why, look at Tesla, the electric car maker whose shares have surged almost 400% this year. And near 4.5% of total shares available for trading, its short interest has fallen to a record low, down from a high of 29% a year ago. So again, Tesla last year was the most shorted stock in the world, okay, in the entire market. And now it's at 4.5% from 30%. That's a huge decline. And again, that's why you see Tesla, all those shorts are getting squeezed out. It's shooting Tesla stock higher, along with all the new interest in this stock, in this revolutionary company. Again, I love Tesla. I still think it's extremely a bubble and overvalued fundamentally. But it doesn't matter what I think because it keeps going up, okay? It looks like all those fund managers over the past quarter went from being bearish and expecting a stock market crash to now bullish. Sean Cruz, senior market strategist at TD Ameritrade, said in an interview, "Sentiment's turned positive about equities in general, but also the sentiment is turning positive for a return to growth." Okay, so see, this is what baffles me, is this guy thinks that obviously people know that the stock market and the economy are disassociated at this point, but a return to growth is a weird statement to make. I don't know if he's talking about economics or just equities. I mean, it's obvious that equities are still growing, and maybe these fund managers are realizing like you literally can't fight the Fed at this point. Even I argued that. I still don't think it just doesn't make sense, especially if they start just giving money out to people. It's hard to articulate. I wish I thought about how to articulate this prior to making this argument. But I just don't think that it can last forever. The Fed printing obviously can work for now, and who knows, it may work for another year, 2 years. For the rest of the time, I don't know. It just doesn't make intuitive sense to me that you can just print trillions of dollars, just give it to people, flood it into the markets without any repercussions, just because it does, like, that's not sound. I mean, it might work like that, and that might just be the complete new whacked out dynamic of the markets. But I mean, I just have a bad feeling. I got a bad feeling in my plums that that's something that we might see a shift in the near future. I'll say that much, okay? So that said, let's just go down this watch list here because I've been saying I will and I keep putting it off. But okay, that's all the articles out of the way, guys. Trust me, let's go down the watch list quick. So again, Bitcoin, Ether really seeing a little pullback right now. We'll have to see how it plays out over the weekend. But I mean, you guys know I'm a perma bull on cryptocurrency right now. I don't care. These pullbacks just part of the game, so realize that. Let's go down here. I mean, along that same to Overstock, Riot, Mars seeing a huge pullback today. Again, we covered that in the newsletter. All crypto-related stocks seeing a significant pullback, aside from MSTR, MicroStrategy. Okay, so MicroStrategy did see some green today, which is interesting. You'd think that you would see more correlation with Bitcoin there. Gold, silver, seeing huge pullbacks today. So gold, physical gold, silver, gold miners, silver miners, all seeing a huge pullback. Again, did cover that in the newsletter as well. Picked up more. That's what I do. I see dips if I'm you guys know, long-term bullish gold and silver miners. very long-term bullish. So picked up more of that. I'm not worried about that. Tesla just keeps ripping. Tesla passing $2,000. I'm up 2.4% today. You can see here NEO is doing extremely well as well. So again, you guys, sectors do move in unison. You can see again, like crypto all red, gold, silver all red, EVs looking pretty good. So you can see Helion, SHL, Tortoise Acquisition Corp is up 11.4% today. I don't know why. Workhorse is probably the single. Workhorse is the dark horse. So if I was to buy one of these right now, it would probably be Workhorse stock, just because of all especially with USPS going through so much kind of whack stuff right now. I would look into Workhorse just because they're almost like an alternative shipping solution. So they sound good to me. There's a lot of just eyes on the shipping sector right now and the delivery logistics sector. So I will keep an eye out on Workhorse. Let me know if you guys are invested in any of these. Spartan Acquisition, doing all right. I'm not bearish on any of these for sure. I think Tesla is just so fundamentally overvalued right now, but again, it doesn't matter what I think. CRISPR, Editas, Genomics, not doing too good. All the biotechs seeing red today, like across the board, aside from Biotech, because I believe they just released some good news. So Biotech, Pfizer, I don't remember the news specifically that they released. I'm just not paying attention to them anymore, to be completely honest. Unless they drop some absolutely crazy news about a successful vaccine, I don't care. Oh, they just announced their phase 3s. Oh man, you guys gotta wrap this up. Battery's dying. Okay, so they did just announce their phase 3s. That's the news, but Moderna's been in phase 3s. That's why I'm still more bullish on Moderna by far. That said, let's move on. Square. There's just so much red across the board. Peloton, stay-at-homes. Alibaba, again, big tech, just really killing it this week. Tilray, Kronos, Canopy, all the cannabis sector doing pretty bad. Cannabis, I feel like cannabis is so freaking undervalued right now still, but I'm just waiting for the reversal. Once cannabis proves a reversal, I'll definitely get back in there, because the fundamentals, people are smoking more weed than ever. So that's that. Skyworks, Marvell, 5G doing all right. Again, that's big tech. DraftKings, Penn, gambling, not doing good. Apple, again, 5% at a $2 trillion valuation. That's an insane amount of capital that's flowing into Apple. DXY, so the dollar is up a little bit today. That's probably why we see Bitcoin and gold, so dollar hedges doing bad. But the dollar is still looking pretty weak in my eyes. We'll see what happens there, but that will definitely affect the performance of Bitcoin and gold as well. Okay, so we'll call it there, guys. Again, got 11% on the computer, so we're gonna have to wrap it up. Once again, if you guys want to know exactly how I'm trading these, exactly what my positions are, I'll call options, I'll put options, stock positions, crypto positions, complete portfolio, daily newsletter, first link in the description. Again, just added the 7-day free trial, so try it risk-free. And if you want to stick around, you pay $20 a month. If not, see ya. But again, I appreciate it if you guys check that out. If not, no worries at all. And I'll see you in tomorrow's Waves Weekly. Okay, so as always, you guys, remember, take action, make waves. Peace.